So we continue with, stop right here guys, focus here. We continue with making informed financial decisions. Today we want to talk about risk tolerance. Risk tolerance comes based on why you have to analyze the potential risk. Potential risks are the potential threats that might occur based on your decision. That is the potential risk. The threats, what you might lose based on the decision you make. That is potential risk. But today we want to look into the extent to which you can endure risk. If you can endure risk, it simply means you can take huge risk. But there are some people they cannot endure risk. So the extent to which the degree of risk that you are willing to endure is called risk tolerance. Do you get risk tolerance here? So look at what I wrote. Risk tolerance. This applies to the degree of risk an individual is willing to endure. So it's about your endurance level when it comes to risk. The degree, the extent to which you can endure further risk is called risk tolerance. Do we get risk tolerance here? Risk means circumstances that are beyond your control. You might lose property, you might lose something. So how much risk can you take? So the extent to which you can take risk is determined by your risk tolerance. Do we get risk tolerance here? How can you endure? Can you endure more or less? If you can endure more, that means you can take a high risk. You can endure less, you can take a low risk. You wouldn't want to take a high risk. Do we understand risk tolerance here? Do we understand or not?
Yes.
So what are those things that we put into consideration to know if you have high risk tolerance or low risk tolerance? Because either you have a high risk tolerance or a low risk tolerance. The first one is the financial goals. When we talk about financial goals, we're simply talking about your objective, what you want to achieve with that risk. The nature and the timeline of financial goal may influence the risk tolerance. So it's about what you want to achieve. Is it a short-term financial goal or a long-term financial goal? If it's a short-term financial goal, you need something, you need money very soon. So you cannot take a huge risk. You want to take a smaller risk. So your goal will determine the level or the extent to which you can tolerate risk. Those who want a short-term goal, those who have a short-term goal will take a low risk. And those who want a long-term goal might take huge risk. You don't want the results now, you want the results in the future. Because you want the results in the future, you might take a high risk. Because the result is not coming here, it's not coming for. It's going to take time. So the longer the term, in terms of financial goal, the higher the risk. Does it make sense or not? You take huge risk if there's a timeline, a very long time for it. But you take a low risk because it's short term. So the short term or long term determine the level or the extent of your risk tolerance. People who think about making it now, making money right now, will take a low risk. But people who think about the future will take a high risk. So because you are thinking about the future, it simply means you can endure. Whatever happens, you can consume it. But those who cannot consume it, they want the result right now. They take a low risk. Do we get financial goal here? The second one, age and stage in the financial life cycle. We'll talk about age. We simply talk about young people and old people. Younger people, because they still have more years to work, they can take high risk. But for old people, they are closer to retirement. They don't have more years to work. They would rather take what? A low risk. Do you understand the age and stage here? So the age and stage is about how old you are and how many years do you have left to work. Do we get it? The next one is current financial situation. For your current financial situation, we're simply talking about how much money you have now. Are you a low income earner or you are a high income earner? If you are a high income earner, it simply means you earn more. A low income earner earns less. So the higher your income, the higher the risk tolerance you have. Just like the age you are. If you are a younger, if you are at a younger age, you have the tolerance to take more risk. Like I am, my age, I'm like, okay, oh, can I still take risk? Oh, I might be able to take risk because I still have, okay, maybe 15, 20 years to work. But someone that is closer to 60 would not want to take the kind of risk I will take. Because that individual has few years left to work. So the more risk you can take will determine how tolerant you are when it comes to risk. Do we understand? So for this one, we're simply talking about your situation, your financial situation. Do you make more money or you make less? If you make more money, you can take huge risk and you have risk tolerance. But those that earn less, they wouldn't want to lose their money because they don't have much. So they don't have that tolerance like you do have. Do we understand? Do we get it or not? You don't get it? Risk tolerance is about how you can endure the risk you want to take. You know risk, right? Good. So, based on the fact that for here we're simply talking about your level of income. How much do you earn? Oh, let's assume you earn $10,000 in a year. I earn maybe $3,000 in a year. The kind of risk you're going to take is going to be different from the kind of risk I take. Because at the end of the year, I earn 3,000, but you earn 10,000. So you're going to have more risk tolerance than I do have. Things that you get yourself involved, I might not be able to get it involved. I might not be able to do it. Do you get it now? So the level of your income might determine your risk tolerance. Is it clear now? The next one is your attitude. Your attitude determines your attitude. Your attitude determines your attitude. So what is in you determines what you do. Your attitude, what is inside you, determines what you do out there. Do you get the point I'm making there? So some people, they are just risk takers. They can endure high risk. But some people, they see it as stressful. Oh, I don't want to do it. I cannot risk it. I cannot. That's their attitude. That is who they are. They don't want to risk it. So those who see risk as being stressful would have low risk tolerance. But those who think about it, they feel comfortable taking risk. They're going to have high risk tolerance. Do we get it? Do we understand?
Yes.
And the last one is investment portfolio. When we talk about investment portfolio, we're simply talking about how many kind of investments do you have. Those who have large investment portfolio, they have high risk tolerance, because you can't think about having different businesses when you cannot have tolerance of risk. The larger the investment portfolio, the greater the risk tolerance. If you have countless of businesses, it simply means you have high risk tolerance. But those who don't have high risk tolerance, they will not have so many businesses. Do we understand? So if you're having large investment portfolio, it simply means you can endure risk. And that means you have high risk tolerance. So tolerance is about how you can endure the risk. Can you or you can't? So these are the factors you put into consideration if we're going to know if you have the ability to endure risk or not. Investment portfolio. The larger the investment portfolio, the larger the risk tolerance. Attitude. Some people are comfortable taking risk. They don't care. They can take it. So that means they have high risk tolerance. Those who see it as stressful, they would not. They have low risk tolerance. Current financial situation, we're simply talking about what you earn, your income level. If you have high income level now, you have high risk tolerance. But if you are living in a low income, category, you would have low risk tolerance. Your age and stage, how the years you have to work and the years you have left to work will determine if it is high risk tolerance or low risk tolerance. People in their middle age, they can have high risk tolerance, but those that are closer to their retirement, they're going to have low risk tolerance because they cannot lose their money. They might not be able to make it back. And the last one is your financial goal. Is it short term or long term? If it is short term, it is low risk tolerance. If it is long term, it is high risk tolerance. Is it clear?